Hey guys, Frank Curzio here with another live video. This one a little bit late in the day. I've been tweeting a little bit, but I also have some great interviews for you set up. Today, you can go to our Curzio Research YouTube page absolutely for free, guys. Interviewed Ed Carr, who's the CEO of US Gold. He's also, been involved in hedge fund markets and entrepreneur, just very very smart guy even with economy. He's on lockdown in Florence, Italy, and he's going to give you a perspective you're not going to hear anyplace else because they're 3 weeks ahead of us, and there's a lot of things that he's talking about that aren't even on the table that people are mentioning here. A lot of that has to do with how long you're in lockdown and the impatience of people, how supplies are getting fewer and fewer, hospitals over just incredibly packed. Where someone sent me a stat that 80% over 80% of the people in Italy who died from the coronavirus died in their homes. Right? They didn't die in the ICU because the ICU they were too packed. They couldn't take them. So that's a great interview. Another one is with a White House insider. It's going to be on my podcast. What time is it? It's 5:30. It's going to be published about now. Again, that's for free on iTunes, Wall Street Unplugged. It's with the Mooch, Anthony Scaramucci. So former communications director for the White House and the Trump administration. Yes, back and forth with him and Trump. We don't get to the politics, not now, right? But just a heavily connected guy. He runs a hedge fund now and worked for Goldman Sachs for 9 years, 9 years. Again, those two interviews for free. Just we're talking about, the best ways to play this, stimulus plan, how much it's going to be. Really, really good, solid details. Again, we're not going to talk about politics, and I know him and Trump have a little spat going on between Twitter and hate each other now and then, whatever. We didn't even go into that. It's bullshit to me right now. Real quick, before I go, I want to say that there's a couple of things that worry me. I know people are getting excited. The market's going higher. They feel like they're missing it. Guys, be very, very careful here, please. There's still a lot of uncertainty. We haven't factored in Europe. Europe is a disaster. Remember, we came from a much greater place. Things were great, 19 times forward earnings. We had low interest rates. We had strong earnings growth, buybacks, banks, a great position. And look where we are now. Europe, those banks aren't capitalized. Okay, they weren't capitalized since the credit crisis. If you're looking at the growth between the five top nations in Europe, which account for 70% of the GDP in Europe and the EU, it's a disaster. I mean, if you look at the past 2 quarters of GDP pre-coronavirus, we're looking at growth between negative 0.1% and growth of 0.1%. The last 2 quarters. I mean, Germany, France, you go through these, Italy. I mean, it's pretty crazy. It really is pretty crazy in Europe. Those banks are not fully capitalized. I have no idea how they're going to get out of this situation. Italy, by the way, has been on lockdown. Florence, not just Florence, Lombardy was the first place to get locked down. Don't forget, they were on lockdown around February 23rd. I mean, this is over a month that they're on lockdown. So people think this is going to end quickly. And before I go, I like keeping these videos short. CLO. Remember that because everyone's going to be talking about it in about a week or two. Collateralized loan obligations. Okay, these are securitized loans that are pulled together. We all know about the credit crisis. Subprime did not cause a credit crisis. That was only a $1.3 trillion market. What caused it is the massive leveraging of subprime loans, 30, 40, 50x. That was the biggest killer, right? That's what crushed the markets, where we only needed to see a 5% decline or default rate, and the whole market was going to crash. Real quick lesson here: when you invest in safe things, which we know that firms paid, the credit agencies to rate these things AAA. So when you have safe investments, you usually leverage the hell out of safe investments, right? Because they're usually safe, so you leverage them. The CLO market is different. The government said they're going to not backstop, but they're directly investing in companies through buying investment grade bonds, right? So they're investing in companies. CLOs are not investment grade. These are below investment grade bonds that are pooled together. And it's a very dangerous market. It's a huge market. Nobody's talking about it right now, but from my good sources, they say it's getting frozen. Why? Because they're rushing to deleverage right now. And why is that? Because we're going to see massive amount of downgrades every place, right, for debt. So we've seen Fitch come out and downgrade 80 companies, including Ford, including Disney, including the airlines. Disney secretly raised $6 billion on Monday. I bet you most people don't even know that. I mean, they're cash strapped. Again, I've been talking about that a lot. So we're seeing the market move higher. The CLO market, be very, very careful, because these are loans that are lower quality, non-investment grade loans. Usually, a good example is, KKR, when they take a leverage buyout of First Data or something. These are those type of bonds, right? A little risky. You don't really see defaults. Now you're going to see defaults. I mean, there's no revenue coming in. There's no revenue coming in for these businesses, and they're highly leveraged. This debt's getting downgraded. There's a rush to go into cash. Nobody's paying attention to that market, guys. Hope the Fed's listening. I really do, because that could be the next shoe to drop, and you're going to see another massive stimulus package on the way, probably in about a week and a half from now. So I'll report back to you guys soon. Again, follow me on YouTube page, Curzio Research, Twitter at Frank Curzio. Questions and comments, I'm here for you. FrankCurzioResearch.com. And as always, love you guys, and I'll report back to you soon. Take care.